The oil industry still looks attractive. Demand continues to grow. As you can see steadily behind me, oil demand continues to grow each and every year except for around the COVID crisis and has since recovered. China is in recovery mode and Europe is also in recovery mode now, which should push global demand for crude oil up on a regular basis. We do prefer crude oil over natural gas, especially here in the United States. You know, natural gas is often a byproduct of crude oil production, hence it tends to get an oversupply at times when crude oil production is growing. So that's been a very weak area the past year, and we would expect that weakness to continue. But with demand growing, as people begin to realize that demand is going to be growing, this should influence the price of the stocks. The other side of the equation is, given the de-investment with regards to the oil industry, the industry is underinvested, meaning that supplies are going to get tight here in the next couple of years as demand continues to grow into a less than robust production increase profile. So we should see tightening supplies, which will mean higher prices, which should be beneficial to all the energy companies. In general, the energy companies are selling at extremely attractive valuations as the market was anticipating a peak in crude oil demand, which seems to be getting pushed further and further out as reaching some of the global goals for reducing carbon consumption seem to be being pushed out as in the realization that it's just not economically feasible given the huge advantage that crude oil has, especially in the transportation market, but in its availability to produce energy at a very cost-effective time frame. So the world is continuing to demand more crude oil. Most of the demand growth is actually coming in the developing world, where they use a fraction of the energy consumption that we're currently using here in the United States. And as they use more and more, demand on a global basis continues to go up. So we think demand's going to be there, tight supplies. We would expect there to be moves in the stocks over time. Stocks we like are Civitas, symbol CIVI, Riley, symbol REPX, Suncor, symbol SU, and a recent addition we've added Exxon, symbol XOM. Exxon is one of the larger companies in the industry and has a very efficient business performance, one of the best deployers of capital. They have a highly integrated business that integrates their oil and natural gas production into their refining and chemical business, so they end up having a very cost-effective system. And they also pay a dividend. In addition to that, we like a couple companies that do not pay a dividend: Vital, symbol VTLE, and Ring Energy, symbol REI. Those do not pay a dividend, but the valuation on those are very compelling based on a free cash flow basis multiple. So that's what we like in energy. Please remember, this is not investment advice. This is what we're doing for our own accounts. Please take a look at our full disclosure on our website. And please, if you want to, sign up for email alerts. You'll get this information on a timely basis on buildingbenjamins.com. Thank you.